Right now, as you're watching this video, the value of every dollar in your wallet, your savings account, and your future paycheck is quietly shifting like sand in an hourglass. Some days it's stronger, some days it's weaker, and the truth is, most people have absolutely no idea what's really happening to their money. You might have heard conflicting stories about the dollar crashing, soaring, or staying stable, and honestly, it's enough to make anyone's head spin. The reality is that understanding what's happening to the dollar isn't just about economics or politics, it's about your financial future, your purchasing power, and the very foundation of your financial security. Today, we're going to cut through all the noise, all the fear-mongering, and all the confusing headlines to give you the real story about where the dollar stands right now and what it means for you. Think of the dollar like the heartbeat of the American economy. Just as your heart rate changes throughout the day, speeding up when you exercise, slowing down when you rest, the dollar's value fluctuates based on countless factors happening around the world. But unlike your heartbeat, which you can feel and monitor, the dollar's movements are often invisible to us until they show up in our grocery bills, gas prices, or vacation costs. The dollar doesn't exist in isolation. It's constantly being compared to other currencies, like a never-ending global popularity contest where countries compete for trust, stability, and economic strength. When people talk about the dollar crashing or climbing, they're usually referring to its value relative to other major currencies like the euro, the British pound, or the Japanese yen. Imagine you're at an international marketplace where every country has its own currency booth. The dollar's booth might be busier some days than others, depending on how much confidence people have in America's economic stability, political situation, and future prospects. This confidence isn't just about feelings. It's built on concrete factors like interest rates, inflation, employment numbers, and government policies that either strengthen or weaken the dollar's appeal to international investors and traders. Over the past few years, the dollar has been on quite a roller coaster ride. During the early days of the pandemic, something fascinating happened. While many people expected the dollar to weaken due to massive government spending and economic uncertainty, it actually strengthened significantly. This might seem counterintuitive, but it happened because in times of global crisis, investors around the world tend to flock to what they consider the safest harbor, and for decades, that's been the US dollar. It's like how during a storm, people naturally seek shelter in the strongest building they can find, even if that building has some problems of its own. But as we moved through the pandemic and into the recovery period, the story became more complex. The Federal Reserve's decisions about interest rates became like a conductor's baton, directing the dollar's performance in the global orchestra. When interest rates are higher in the United States compared to other countries, it's like offering a better deal to international investors. They can earn more money by keeping their funds in dollars, which increases demand and typically strengthens the currency. Conversely, when rates are lower, the dollar becomes less attractive, like a store offering a sale that's not quite as good as the competition down the street. The relationship between inflation and the dollar is equally important to understand. When inflation rises rapidly, each dollar in your pocket loses some of its purchasing power. You've probably noticed this when buying groceries or filling up your car. But inflation also affects the dollar's international value in complex ways. Initially, high inflation can weaken a currency because it erodes trust in that country's economic stability. However, if the central bank responds by raising interest rates to combat inflation, this can actually strengthen the currency by making it more attractive to foreign investors seeking higher returns. Right now, we're living through a particularly interesting period for the dollar. The Federal Reserve has been walking a tightrope, trying to balance fighting inflation with maintaining economic growth. It's like being a chef who needs to add just the right amount of seasoning. Too little, and the dish lacks flavor, too much, and you've ruined the entire meal. Every decision the Fed makes about interest rates sends ripples through currency markets around the world, affecting not just the dollar's value, but also the cost of everything from imported goods to international travel. One of the most significant factors influencing the dollar today is the ongoing shift in global economic power. For decades, the United States has enjoyed what economists call exorbitant privilege, the benefit of having the world's primary reserve currency. This means that countries around the world hold dollars in their central banks. International trade is more often conducted in dollars, and oil is typically priced in dollars. It's like being the host of the world's biggest party. Everyone comes to your house, speaks your language, and plays by your rules. However, this dominance isn't guaranteed forever. Other countries and economic blocs are increasingly looking for alternatives to dollar-dominated systems. China has been promoting the use of its currency, the yuan, in international trade. The European Union continues to strengthen the euro's role in global finance. These developments don't mean the dollar is about to collapse, but they do suggest that its future dominance isn't as certain as it once seemed. It's like being the popular kid in school. Your status can change if you don't continue to earn and maintain that position. The practical impact of dollar fluctuations on your daily life is more significant than most people realize. When the dollar is strong relative to other currencies, imported goods become cheaper, which is great news for consumers. Your electronics, clothing, And even some food items cost less because retailers can buy them more cheaply from overseas suppliers. It's like getting a discount at every store that sells imported products. However, this same strength can hurt American exporters because their products become more expensive for foreign buyers, potentially affecting jobs in export-dependent industries. Conversely, when the dollar weakens, the opposite occurs. Imported goods become more expensive, which can contribute to inflation and reduce your purchasing power. But American exports become more competitive globally, which can boost domestic manufacturing and employment. It's a constant balancing act where gains in one area often come with trade-offs in another, like a financial seesaw that's always trying to find equilibrium. For young adults and those just starting their financial journey, understanding these dollar dynamics is crucial for making informed decisions about everything from career choices to investment strategies. If you're considering studying abroad, a strong dollar makes foreign education more affordable. If you're planning to travel internationally, dollar strength directly affects how far your money will go in other countries. Even if you never leave your hometown, currency fluctuations affect the cost of countless products and services you use every day. The housing market provides another lens through which to view dollar impacts. When foreign investors see the dollar as strong and stable, they're more likely to invest in American real estate, which can drive up property prices in certain markets. This foreign investment can create opportunities for some while making homeownership more challenging for others. It's like having out-of-town buyers compete for the same house you want. Sometimes it works in your favor, sometimes it doesn't. Looking at the current economic indicators, several factors suggest the dollar's near-term direction. Employment remains relatively strong, which typically supports currency value because it indicates economic health and productivity. However, government debt levels continue to rise, which can concern international investors and potentially weaken long-term confidence in the dollar. It's like having a good income, but also carrying a large credit card balance. Your immediate situation looks fine, but there are underlying concerns about sustainability. Interest rate expectations play a huge role in current dollar movements. Financial markets are constantly trying to predict what the Federal Reserve will do next, and these predictions drive trading decisions that affect the dollar's value. When investors expect rates to rise, they often buy dollars in anticipation, strengthening the currency before the rate change even occurs. It's like people rushing to buy tickets for a concert before the price goes up. The anticipation itself creates the movement. Global geopolitical events add another layer of complexity to dollar movements. International conflicts, trade disputes, and political instability in other regions can drive investors toward dollar-denominated assets as a safe haven. The dollar often benefits from being perceived as the cleanest dirty shirt in a basket of global currencies. Not perfect, but better than the alternatives during uncertain times. This phenomenon has been particularly evident during recent global tensions, where the dollar has strengthened despite domestic economic challenges. The technology sector's dominance in the American economy also influences dollar strength. As long as the United States remains the global leader in technological innovation, international demand for American tech products and services supports dollar demand. Companies around the world need dollars to buy American software, services, and technological solutions. It's like being the only store in town that sells something everyone needs. People have to come to you with your preferred form of payment. Energy markets create another important dynamic for the dollar. While the United States has become more energy independent through domestic oil and gas production, global energy prices still affect the currency. When oil prices rise, it can create inflationary pressure that weakens the dollar's purchasing power domestically, while potentially strengthening it internationally, if investors view America's energy independence as a competitive advantage. For investors, understanding dollar trends is essential for portfolio management. A stronger dollar can hurt returns from international investments when those returns are converted back to dollars, while a weaker dollar can boost international investment returns. Currency hedging strategies become important considerations for anyone with significant exposure to foreign markets or investments. It's like having an umbrella. You might not need it every day, but when the weather changes, you'll be glad you have protection. The cryptocurrency market has introduced a new dynamic to currency discussions. While digital currencies like Bitcoin are sometimes promoted as alternatives to traditional currencies, their extreme volatility makes them quite different from established currencies like the dollar. However, the growing interest in cryptocurrencies does reflect some concerns about traditional currency stability and the search for alternatives to government-controlled money systems. Small business owners face unique challenges from currency fluctuations. Those who import materials or products must constantly adapt to changing costs based on dollar strength. Exporters face the opposite challenge, with their competitiveness changing based on currency values they can't control. Many small businesses don't have the resources for sophisticated currency hedging strategies, making them more vulnerable to sudden currency movements. It's like trying to run a business while the cost of your raw materials changes unpredictably. Challenging, but not impossible with proper planning. The student debt crisis in America also connects to dollar strength in interesting ways. Many international students come to American universities partly because a strong dollar makes American education a valuable investment. However, for American students with debt, currency strength or weakness doesn't directly affect their loan balances, which are already in dollars. The indirect effects come through employment opportunities and wages, which can be influenced by the broader economic impacts of currency movements. Looking ahead, several trends could shape the dollar's future trajectory. The ongoing digital transformation of the global economy continues to favor countries with strong technological capabilities, potentially supporting long-term dollar strength. However, increasing government debt and the possibility of higher inflation could create headwinds. Climate change and the transition to renewable energy will likely create new economic dynamics that could affect currency values in ways we're only beginning to understand. The demographic changes in America, including an aging population and changing workforce dynamics, will influence long-term economic growth and productivity, which ultimately affects currency strength. Immigration policies that affect the flow of skilled workers could also impact the dollar's long-term prospects by influencing innovation and economic dynamism. For anyone trying to make sense of daily news about the dollar, it's important to distinguish between short-term volatility and long-term trends. Currency markets can be extremely volatile in the short term, responding to news, rumors, and speculation. But the long-term value of any currency ultimately depends on the underlying economic fundamentals of the country that issues it. It's like the difference between daily weather fluctuations and long-term climate patterns. Both matter, but in different ways and over different time horizons. The practical steps you can take to protect yourself from currency volatility include diversifying your investments across different asset classes and geographic regions, maintaining an emergency fund to weather short-term economic disruptions, and staying informed about economic trends without getting caught up in daily market noise. Building skills that remain valuable regardless of economic conditions is always a good strategy, as is maintaining flexibility in your financial planning to adapt to changing circumstances. Understanding the dollar's role in your financial life isn't about becoming a currency trader or trying to time market movements. It's about being an informed citizen and consumer who understands the broader economic forces that affect your daily life. Whether the dollar is currently climbing or falling, the most important thing is building a strong foundation of financial knowledge and habits that will serve you well regardless of currency fluctuations. The dollar's future will be shaped by America's ability to maintain its economic competitiveness, political stability, and innovative capacity in an increasingly complex global environment. While no one can predict exactly where the dollar will be in 5 or 10 years, understanding the factors that influence its value puts you in a better position to make informed decisions about your financial future. The key is staying informed, thinking long-term, and building financial resilience that can weather whatever changes lie ahead. Quick question before you leave. What's your biggest financial challenge right now? Drop it in the comments, and I might just create a video addressing it. If this helped solve one of your money problems, give it a thumbs up and subscribe for more practical financial advice that actually works.